Hi everyone, this is your financial guide CS Keerthi joining you from Dubai. In this video, let's understand the implications or impact of ongoing Israel and Hamas war on global economy as well as financial markets, in particular India and US. Why India and US? Because as an NRI, we always have inclination towards investment in US market because we believe that US dollar is safe haven asset. But given the growth prospect and the changing scenario in today's global economy, most of the NRIs started investing in Indian stock markets too. So understanding the economic implications of the war definitely stops us from panic reaction and planning the investment in the most strategic manner. So stay tuned till the end, and if you like this content, please subscribe and share it with your friends. And now focus on what is the economic implications on the financial market, how it might impact on our investment, because most of the time when we understand and predict certain implications in advance, we can plan our finance better, investment in strategic way, and definitely we will not have any kind of panic selling or reaction. So let's begin. If you observe, Middle East is not only having a strategic location for connectivity in global trade, but also main supplier of energy. And any kind of geopolitical conflicts or issues happening in this region will definitely send tremors across the world economies. Because the whole world is still dependent on energy supply from Middle East. That is the reality, even for today. Let me draw your attention to 1973 Arab and Israel war. So this time, all Arab countries had imposed an official ban, or the oil embargo on the Western countries had created a peculiar situation called stagflation. That means the oil supply was cut off and Western countries started witnessing this stagflation, not even recession. Remember, stagflation is worse than recession, little better than depression. That's all I can say. If you say this word stagflation, that means there is a stagnant growth plus high inflation. No matter how much ever the government tries, but inflation remains high, affordability is low, unemployment is high. The stagnant growth persists for quite a long time. So this period of stagflation has wiped off a lot of wealth from the global market. Will the same situation repeat now? Well, it's really difficult to find a correct answer for that, but it depends on the escalation or prevention or what kind of direction that assumes. But if you analyze the kind of relationship Arab countries have with Israel, the answer is likely to be no. There may not be such situation, but the world actually has suffered a lot due to COVID, and the Russia-Ukraine war has further made the situation worse. It has caused heavy disruption in the supply chain of food as well as oil. So the world is not even, moving at the snail's pace. I can say it's limping. So at this situation, how the global market might respond to the ongoing as well as in case if the escalation happens in this Hamas as well as Israel war. Let's analyze in the detail. Let's break down this video into 4 parts. 1, impact on global economy, and then impact on American as well as Indian economy. Lastly, which is of much relevance to the NRIs, because how it might impact the exchange rate and how I am planning my investment in this whole year, so that as an NRI you can also plan to do the same if you find it useful. So stay tuned till the end, and if you like, don't forget to share and subscribe this channel. So the first point is how it might impact global economy. Bloomberg has analyzed it in 3 situations. One is where it is supposed to be just between Israel and Hamas, so it can be just regional or local conflict. Next, if it spills over to other neighboring countries such as Lebanon, then the impact will change. And our concern is the worst case scenario, that is where The country which is a major producer of oil, that is Iran, jumps into this conflict. In this case, what could happen, The world might witness a recession which might wipe off $1 trillion from the market. And globally, we might have to take the revenue drop of 1.7%. Means the growth will be at minus 1.7% because the oil will reach maybe up to $150 per barrel. So this is what the estimate of Bloomberg. Even IMF studies are revealing that if the oil price is going up by 10%, then the global growth might have a dip of 0.15% and inflation might increase by 0.4%. Second one is impact on US market. If you had been observing closely, immediately Israel had declared that we are at war or the war broke out, the market had plunged. But then it just bounced back. So it is giving completely different narrative. There is another part to the story. I personally feel that there are two reasons for that. One, market is assuming that it is a local or regional conflict. So unless and until there are other countries which are jumping into this war scenario, it's not going to respond differently. So only when the war is getting dragged on to considerably longer period of time or escalated in a way that other neighboring Arab countries are also jumping, especially Iran is jumping into this war, the response is going to be same. And there is also realization that there cannot be worse situation than COVID. So market had actually seen the worst phase in 2019 and 2020. And the recovery had been slowest and sluggish because of many other geopolitical issues like our Russia-Ukraine war. So maybe there is a possibility that it had factored in so many assumptions and conditions. If the war is not escalated to next level, the impact on US market might be very minimal. And as usually in this situation, defense stock, oil stocks and even fixed income securities including bonds will become investors' favorite. Second, impact on Indian economy or Indian stock market. India is importing $2.4 billion worth of goods from Israel. And Israel is importing around $8 billion worth of goods from India. Only in case of escalation or prolonged state of war, this bilateral trade might take hit, and in this case, it will build pressure on currency or Indian rupee, which might cross 83 or 84. Other than that, at individual stock level, if you see the companies which are having business operations, such as Sun Pharma or the Adani Group, etc., might take some margin cut because now they have to pay extra cost or premium for shipping or other expenses involved. At economy level, what happens? India is a major importer of oil. That means 85% of the oil requirement is being fulfilled by import only. So in this case, when the import bill goes up, when oil starts hitting new high every day, obviously they have to pay little more on oil imports. So when the import bill is going higher, that means the current account deficit will go on widening, which defeats the purpose and all the efforts central bank as well as the central government had been doing till now after COVID. In India, energy prices are subsidized. That means the government doesn't allow common person to feel the pinch of rise in oil price. Now you might be thinking, who is there to absorb these losses? Three public companies called IOC, HPCL and BPCL, they are going to absorb the shock of higher oil price, and now the common man is relieved. Earlier, these three companies together had reported combined loss of 21,000 crores rupees. And they were just taking sigh of relief before this war because the oil price started easing. Now this comes as a rude shock to them. Now this is not only shock to these three companies but also to RBI, which had really done phenomenal job in India in managing inflation. Recently inflation had come down to 5%, but RBI will not be able to lower the interest rate because the uncertainty in global context is that high. It has to keep the borrowing or the interest level at high. That means it's not at all a good news for those people who have already taken loan or planning to take the loan, right? It is a simple logic. Increase in oil price means increase in fiscal deficit. CAD current account deficit as well as the borrowing cost. The last but very important point is exchange rate volatility. If you actually observe, RBI, Reserve Bank of India in India had done exceptional, fantastic job in preventing rupee from free fall as well as giving support between 80 to 82, and it had actually decided we will never ever allow rupee to go beyond 83. But what has happened? Once the war had been declared, the rupee against the dollar, the exchange rate had gone up from 82.6 to 83. Now this goes really beyond what RBI had predicted, right? It's just psychological. In the time of uncertainty, people really like safety and clarity. So what happens? There is something called US dollar index, which tracks the strength of US dollar against other basket of currencies. Now that has gone up from 100 to 106 because of the ongoing war. Means there is flight of capital. People don't like weaker rupee. People like to stay invested in stronger US dollar because they feel that this is safe haven asset. My money is going to be safer if I hold it in USD. So the capital moves from weaker currency to stronger currencies. That's the reason why you can see upward trend in favor of US dollar index in time of this war or uncertainty. The most important part of the video is, as an NRI, what I am doing right now and what significance it holds to you also, because NRIs usually are earning in stronger currencies and might be planning for diversification in their investment. So let me tell you, if at all you are doing SIP, please don't stop systematic investment. What you have already started, it has to go. We will assume the best case scenario that war will be contained to the local areas and it doesn't get escalated to the next level or it doesn't spill over to other neighboring countries, because world leaders are aware of the fact that world is not ready to take another turn. We have already suffered and we are limping now. Now this is the best case scenario. All depends on how it progresses and nobody knows the direction. Now, in case of worst case scenario, what will happen? Definitely market will collapse and market will bleed. And if at all you are an investor who is holding long-term perspective, this presents an excellent buying opportunity. So if you are planning for any kind of lump sum investment, please don't do it now. Hold back and watch everything that is happening. Now, if at all there is a significant major correction in the market, that is the time you should start pumping in the money. Now, very important point, if at all you do not have any emergency cash or you have never thought of keeping any liquid cash, please build some safety buffer and hold it in preferably stronger currencies. Because in times of uncertainty, the only one thing that gives peace of mind is cash. So lock up your 6 to 8 months of expense as emergency fund, and beyond that also, if possible, try to hold certain proportion of your whole portfolio in cash, that too in strong currencies. So let's hope world will move towards the best case scenario and the war will end soon. Let me conclude this by saying, whenever there is high level of uncertainty like this, majority of the people, they have fear in their mind and they panic. That's why they are the one who start selling off, and this creates a downside spiral and a bear market starts. People who have long-term perspective in the market, I do hold that. So they start buying at that time, which presents an excellent opportunity for buying actually. So these set of people start pushing the market up and they are the one who are creating bull market. Remember, if you stay for the long term, nothing impacts, because bear or bull, it's cyclical and it's part of staying in market. And witnessing this cycle is a part of being an investor and staying in the market. I hope you found something valuable in today's video. If you like it, please don't forget to subscribe and share it in your friend circle. See you in the next video.